Good morning, everyone. This is Financial Literacy 101. First and foremost, I want you guys to go over to my new YouTube channel called Not My Idea. Okay, I'm trying to get some subscribers on that where I'm gonna break down intelligent thought. I'm gonna do funny things. I'm gonna do news. I'm gonna do racial issues. So we're gonna kind of dissect the Financial Literacy 101 channel where I'm just going to strictly do finances, but I'm still going to be doing my cigar talks every now and again. But most of my commentary and oration about certain issues will be on Not My Idea. So first and foremost, I want you guys to go over there and subscribe. Now, let's talk about Smile Direct Club. I think this is an important stock that I think you guys could possibly make some money on or possibly lose some money on. Now, if you see the light indicator, you see that it's a yellow or somewhat off white. That indicates that I really don't know which way you should go. Green means that I believe that you should buy, whether be call, put options or not. And then red, it really doesn't get my recommendation. So always look for that light in the back for you can get a really good indication of whether I'm asking you or giving you the advice for you to sell or to buy. Okay. Now, this particular stock, we have to look at the headline news. And it basically says here, it's Federal Day, and one Wall Street bank warns S&P 500 could fall another 20%. Goldman Sachs says the bull market will continue. Now, the thing that's direct correlation with the Smile Direct Club is that in their last quarter, September of 2021 was Q3. Look at their revenue. You have revenue, net income, diluted EPS, net profit margins, operating income, net change in cash. All of these are down millions and millions of dollars. And so currently this particular stock, this company is now cutting a lot of their international workers in order to save money, in order to increase revenue, in order to build profit. But ladies and gentlemen, we'll get into the stock review right after this. All right. So with that being said, family, we see that the Smile Direct Club here is down at 88% in the past 5 years. In the past year, it's been down 81%. The past 3 months, down 53%. The past month, down around 7%. The past week, it was up 19%. In the past day, it's been up 1%. Now, this stock is actually projected to go around, this stock is actually projected to go around $5 per share. The current stock price is around $2.50. So you can essentially make almost 200% of profit on this particular stock. And at a price at $2.50, you can easily invest $100 into this particular stock. Now, also, don't forget about your options, your call options and your put options. But we're going to get into some more of the details to see if this is an attractive stock for your portfolio. That way we'll know whether you should invest or not. I'm doing a lot of headline news because I think that's important, but we're going to get into the analytics of the stock as well. Okay, so let's get into that. So we see here in the past 5 days, it's been up roughly 23%, but year to date, it's only been up 5.5%. Now, the analysts here on MarketWatch are stating that you should hold this stock if you have it, but their EPS, earnings per share, is down 70 cents per share, which is they're operating out of that. And this is why they're laying off a lot of their workers. Okay. So we get into the headline news here. We say Smile Direct Club shares rises 14% after company announces strategic actions. And one of those strategic actions was laying off workers. Smile Direct to quit some countries, lay off workers, and bid to become profitable. So already this is beginning to be very, very profitable, ladies and gentlemen. So when we look at these particular things, we have to see what a company financial structure is and what are they doing to cut the fat in order to generate profit. These are all things that we should be looking at when we're looking at stocks to invest in. That's what we should be doing. So let's move on here. Here's another headline news with this stock. It says Smile Direct to quit some countries, lay off workers to become more profitable, as I stated before. Now, as we get into some more financials, we see here on Yahoo Finance, we see that the short term and mid-term that this stock is going up in the next 2 to 9 months. So there is money to be made here. And I advise you guys to get in on this if you're willing to risk some of this high volatility. Now, we know the current state that the market is currently in. The market looks like it's tumbling. Some people Some people are already trying to project, is this a market crash, right? And I know a lot of analysts come out and say, hey, I wouldn't even buy the dip right now. And I wouldn't even buy the dip. Me personally, my thing is this: the stock market isn't going anywhere. So this is that fear-based investing, which I said you need to exercise patience and you have to look to the future. So when these stock prices are dropping, guess what mega investors are doing? They're going in and buying up the stock market. And sooner than later, this stock market is going to come roaring back and you're going to be mad that you didn't invest. Mark my words. So family, as we're looking at the projections of these things right here, we see that the recommendation trends here on Yahoo Finance, it's a hold and it's underperforming, that this stock is underperforming and a hold. So when you look at Smile Direct Club, they directly deal in aligners, right? The little mouthpiece, the mouth guards that straightens your teeth, right? This is 60% less than buying braces. Most people don't have money to buy braces if you don't have some really good dental insurance. So saving 60% on aligners that you wear for what, I don't know, a year or two or so can save you 60% less of what braces cost. I think braces cost what, $4,000 or $5,000. And I can save 60% of that, like only $1,000. So I may do that. So this is a very valuable choice. And I believe that this stock may come roaring back, but yellow light, I just don't know, right? Because we have the pandemic going, we have the current market conditions that things are going down, and then we have this stock that's $2.50 a share, very, very attractive. But I do have something that I believe is alarming. Yeah, I'm not going to forego this information. I'm just going to show you. When this stock first came out, this stock was at $20, $20.50 per share. And now this stock is at $2.50 per share. What brings me to my next. As we stated before, most analysts are saying hold this stock if you have it and that is underperforming, but none of them are saying sell this stock, okay? They saying that the analyst price target is $5 per share, but there's no other projection. So you mean to tell me those who bought in at the IPO of $20.50 have lost $20 per share? Excuse me, have lost $15.50 per share, and that this stock may not rebound, but it may rebound to $5. I'm glad I didn't invest in this stock. And if we said it before that the EPS is down in Q3, it's been steadily going down. Okay. So when we look at all of these analytics, what is the stock forecast for the next 2 to 12 months? Well, according to CNN Business, on the low end is at $2, which we're roughly at. On the median end, increase of $51.8%, goes up to $3.75. And then we look on the high end, 102% increase to $5 per share. So again, I ask you, is this a good stock for you guys to invest in? I'm going to leave that up to you. All the numbers tell me at least go in and buy an option. Now, the question is, should you buy a call option, meaning that the stocks are going up, meaning the price of the stock is going up, or should you buy a put option and you're investing that the stock is actually going down? Nonetheless, I was really thinking that if I buy the stock now, we either be a call or put, and I exercise that option, I'm going to roughly spend around $250 for 100 of these shares. So if these shares even get to $3, I'm in the money. Okay, I'm in the money. See, sometimes you have to look at analytics when it comes to stocks, and it really doesn't take that long because you have to make a really timely decision, because time and money are coherent. They go hand in hand, right? So if I buy 100 shares and this stock tank, I would just hold on to those 100 shares, because eventually I would think, unless this company doesn't go under, I can make the money back. Now, there's always been a debate. There's always been a battle. There's always been an argument. Whether you should exercise an option, call a put, or you should sell that call or put. I'm going to leave it up to you, ladies and gentlemen. This is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day, and I'll see you on the next one.